Hi everyone, this is Dr. Ashutosh Singh, consultant financial planner and health planner. I am going to simplify the process of personal finance for you all. Personal finance is a very complicated subject, yet it's very simple once you understand it. Personal finance involves areas related to cash flow and budgeting, loans and borrowing, investment planning and wealth management, insurance and risk management, tax planning, retirement and pension planning, and most of all, estate planning. Today I'm going to talk about SIP, what it is, what are the specifics of SIP, and how you can benefit from this. SIP is the short form of systematic investment plan. It's a financial planning tool that helps you create wealth by investing small amounts of money over a period of time. It allows people to invest small sums of money instead of a lump sum amount. It can be done weekly, bi-weekly, monthly, quarterly, or even daily. In the Western countries like US, Canada, it's also called as PAC, that means pre-authorized checking. In India, SIP helps you invest a small amount of money in a mutual fund scheme or an ETF, what we commonly call as exchange traded fund, or a share of a company. SIP acts as a market timing mechanism whereby it forces you to buy more units when the price is low and less units when the price is high. So it helps in an average purchase pricing mechanism. So this is what we call rupee cost averaging. Rupee cost averaging actually helps in enhancing your return. During times of volatility and market panic, investor normally gets fearful and nervous. They tend to sell their investments at a lower price and eventually lose on their investment returns. So SIP helps you to automatically keep buying at those days of market volatility. So this actually helps you in accumulating more units at lower price. SIP helps you to avoid nervous selling during market panics, as it evens out your investments during ups and downs of the markets. It is said that compounding is the eighth wonder of the world. To get the benefit of compounding, one should remain invested for a longer period of time. Since SIP prevents us from panic selling, it helps us to remain invested for a longer time. So eventually a person, the investor, can benefit from the power of compounding. So SIP directly or indirectly helps a person to benefit from the power of compounding. SIP allows you to invest smaller amount of money as per your budget. It can be as less as 500 rupees, 1000 rupees, 1000, 2000, 3000, 5000, whatever your budget allows. It gives you the ability to diversify into various areas, various sectors with very little capital. For example, one can take exposure in large cap funds where all the holding companies are having larger market capitalization, or even small cap funds where smaller companies are involved, or mid cap funds, or multi cap funds, or even diversified funds, or even sectoral funds like healthcare fund, banking sector fund, manufacturing sector fund, automobile sector fund. One should keep in mind that in investing, the returns are mostly based on the market, but much more than the market, it's the emotion and psychology that's more important. So how do you deal with emotion and psychology? In fact, SIP as a tool, it is the most suitable way where you can control your emotion and psychology irrespective of the market downturn. SIP is the simplest way of investing without having to worry about the market scenario. One can plan their financial goals, and depending on the risk tolerance and time available, they can plan their investments so that little by little, drop by drop, they can accumulate their wealth and achieve their financial goals, irrespective of what they are. Be it their children's education, or their retirement planning, or their pensions, or leaving an inheritance for their kids, or planning a vacation, or even as small as buying a car, accumulating wealth for whatever the goals are. So SIP as a tool, it's the simplest and easiest financial planning tool I suggest every common man to take advantage of this. I'm going to give a simple example of, let's say a person sets aside 100 rupees a day, which is as simple as 100 rupees. So it comes to 3000 rupees a month. Now, if one can achieve 12% return in their investments, which is easily achievable over a longer period of time. So the total investment of 3000 rupees a month and a 12% return. So over a 10-year period, the returns comes to 7,06,918, where the total investment is 3,63,000. So you can see the money is almost doubled in 10 years. But if the same time frame is increased to 20 years, then the investment return becomes 30,30,120. The total investment here is 7,23,000. Now here you can see it has become 4 times. When the investment is increased to 25 years, just adding 5 more years, the total return comes to 57,52,208, where the total investment is 9,03,000. Now here you can see it's almost 6 times. The investment has gone almost 6 times. Adding 5 more years to the investment timeline, making it a total of 30 years. So let's say somebody invests for 30 years, same amount, 3,000 rupees a month at a 12% return. The total corpus comes to 1,06,97,586. Now imagine it hits a target of 1 crore. Total investment of only 10,83,000. So imagine it becomes 10 times. So for 10 years, it's 2 times. For 20 years, it's 4 times. For 25 years, it's 6 times. And for 30 years, it's 10 times. So look at the exponential growth, what can happen at a simple 100 rupees a day, 3,000 rupees a month. So if you are 30 years old and you are planning for your retirement at age 60, just keep aside 100 rupees a day and just do an SIP. Don't bother about anything else. Just start a simple SIP in a balanced fund and you can easily target a 1 crore corpus when you are retiring at the age of 60. I'm sure this is just a basics. This is just a outline of what an SIP is. I'm aware a lot of people must be having queries. So what I'll do, I'll put my email address, my Facebook page for anyone to contact me. So please let me know whatever queries you have. No query is small. Each and every query I seriously honor. So please send me your queries and I'll try to answer them as early as possible. And let's start the investment journey. No money is too small. Whatever you can save, start saving and start accumulating, start creating wealth. Because end of the day, it's all wealth that matters. Thank you very much.